Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back to another exercise tutorial for chapter 1 of our managerial accounting course, ACCT 428. In this video, we're going to be looking at the last exercise that we have selected for you for this chapter, exercise 1-14A, which covers the just-in-time learning outcome. Okay. Let's read the exercise together. It says, Becky Shelton, a teacher at Kemp Middle School, is in charge of ordering the t-shirts to be sold for the school's annual fundraising project. The t-shirts are printed with a special Kemp School logo. In some years, the supply of t-shirts has been insufficient to satisfy the number of sales orders. In other years, the t-shirts have been left over. Excess t-shirts are normally donated to some charitable organization. T-shirts cost the school $5 each. Let's highlight this part. And are normally sold for $12 each. Miss Shilton has decided to order 700 shirts. Okay? So I hope that the question is clear. So this school typically holds an annual fundraising event, and in that event they sell some t-shirts with the school's logo on them. The problem is they don't know for sure how much or how many t-shirts they're going to sell each year, so they have to kind of estimate and see approximately how many t-shirts would be sold. So some years they would receive more orders than the t-shirts that are available, so that would incur the school some opportunity cost. For example, if they order 500 t-shirts but they receive orders for 700, so there's some opportunity cost there. And in some years they order so many t-shirts that they don't receive enough orders to sell all of the t-shirts. So what they do in that case is that they have to donate the leftover t-shirts to some charitable organization. Okay? So what is required? A, if the school receives actual sales orders for 600 shirts, what amount of profit will the school earn? What is the cost of waste due to the excess inventory? So let's see. Here, part A, sorry, let me make that a bit smaller. For part A, we're just going to do like a small basic income statement to run our numbers. Starting with the sales revenue for 600 shirts. These are the number of shirts that they would actually sell, and they would sell them for $12 each. Okay, so based on that, the sales revenue is going to be 600 multiplied by 12. That is $7,200. Okay. Then we need to deduct the cost of goods sold. Again, for the same number of t-shirts. However, this time we're using the cost of each shirt, which is $5 each, right? So we're going to multiply that by $5. 600 multiplied by 5, that's $3,000. Okay. Deducting the cost of goods sold from the sales revenue is going to give us the gross margin. Which is going to be $4,200. Okay. In addition, we're going to also include the cost of waste, because the remaining inventory that they have, they're not going to hold this inventory and sell it in the next year's event, right? The question told us that whatever left over, they donated to a charitable organization. So the cost of these t-shirts that were left over, we can record it here as a cost of waste, right? So we'll write down waste due to excess inventory and the number of shirts that were left over is 100 shirts multiplied by the cost per shirt, which is $5. So that's going to be $500 cost. Okay. Now we can close our income statement. The net income is going to be $4,200 minus $500. That is $3,700. Okay, so that is the answer to part A. Part B, it says if the school receives actual sales orders for 800 shirts. Notice this time they received 100 orders in excess of the number of shirts that they hold in the inventory. So what amount of profit will the school earn, and what amount of opportunity cost will the school incur? Again, we're going to do this as a basic income statement. Okay, the sales revenue in this case is going to be for the total number of shirts that they have, which is 700, multiplied by the selling price per shirt, which is $12. So 700 multiplied by 12, that is $8,400. So this is going to be the school's revenue in this case. And then we're going to deduct the cost of goods sold for the same number of t-shirts, which is 700, but this time we're going to use the cost per shirt, which is $5. So 700 multiplied by 5, that is $3,500. Okay? And that's it. We can close it here. We have our net income. We don't have any other expenses. You might say we still have the opportunity cost. Yes, we do. We're going to calculate it next, but we cannot include that in the income statement because it's not an actual dollar amount cost. So we cannot include it in our calculation here. We will calculate it separately. Okay. So what would be the net income in this scenario? $8,400 minus $3,500, and that is $4,900. So that's the first part of the requirements. We still need to figure out the opportunity cost, so we'll write it down here. The opportunity cost of lost profits is going to equal the gross margin of the of a unit of sale, which is the selling price, the $12, minus the $5 cost of each t-shirt, okay, multiplied by the number of t-shirts that are ordered but are not available to be sold. Okay, meaning that we provided, or the school have had 700 t-shirts available for sale, but they received 800 t-shirt orders. So 100 t-shirts, this is a lost revenue, right? So we will multiply by the 100, which is the number of t-shirts that would have been sold if we had them available. Okay, so 12 minus 5, that's 7, multiplied by 100, that is $700. Okay, so that is requirement B. We have the net income and we have the opportunity costs. All right, part C, it says explain how a just-in-time inventory system could maximize profitability by eliminating waste and opportunity cost. Here there's no one answer, so I'm not really gonna write the answer for this part. We'll just discuss it. How can the just-in-time inventory system help the school in this scenario? Let's say that the school manages somehow to implement an efficient just-in-time inventory system where they would only have t-shirts available for each sale. So they will not receive, they will not bring inventory or a specific number of t-shirts that they need to estimate and then see how many orders they get. They might get orders under or not enough orders to cover the quantity, or maybe they get more orders and then they suffer from opportunity cost. So if they somehow manage to implement a just-in-time inventory system, that would help them in that they will not need to bring too much inventory, that they would incur some costs that are associated with that. So they will eliminate the inventory holding costs, okay? And also they will eliminate any opportunity cost that might happen, because there will not be any opportunity cost. If they get orders for 900, they will have these t-shirts ready per order just in time, and they will sell the same amount of or they will meet all of the orders, okay? So if they manage to implement an effective just-in-time t-shirts or just-in-time inventory system, they will get rid of both problems that happen with holding the inventory, okay? So they would not have to keep any inventory, and they will also eliminate the chance for having or for incurring any opportunity costs. Okay, this is how we solve this exercise 1-14A. This was Mohammed Al-Jaber. I hope that you enjoyed this tutorial series. If you have any questions, as always, please feel free to drop them down in the comments, and I'll try to respond to each and every comment. And until I see you in the next exercise tutorials, keep on learning. Take care.